Good evening, guys. It's Saturday, March 25th. My name is Dave Coker, and this is Talking About Finance. And you are here, and here we are again in this place, a period of calm where we can clear our thoughts, a moment of clarity after a frantic week, full of news, full of noise, full of emotion, full of misinformation, full of opportunity if you look at the data. But few do. Instead, they move with the crowd. They buy at the wrong time. They sell at the wrong time. And they lose money in the markets when it's so easy, so very easy to make money in the markets. We know the right time to buy is now. We know the right time to sell is never. Choose your assets carefully for cash flow. Nothing else matters. Choose your assets carefully for security of cash flow. Nothing else matters. Don't buy a stock, don't buy a bond, don't buy a rental property. Buy a package of cash flows, but at a sensible price and for a sensible yield. Take the returns on your investment and buy more at a sensible price. This is the power of compounding. This is financial independence. This is a remarkably simple, a remarkably powerful way to achieve financial independence. A system anyone can do, but few try. Why? They don't actively think critically about the advice, about the tips, about the noise. In other words, they react. They don't look at data. Ask them why they bought, you won't get a clear answer. Ask them why they sold, you won't get a clear answer. They don't understand what we do. We buy and we sell assets. We need to understand prices. We need to understand returns. We need to pick assets that pay us to hold them so we can get rich slowly. And that leaves us plenty of time to talk about finance. Last week, the S&P 500 closed up about 1.39% on the week. 6 sectors: communication services, materials, energy, information technology, healthcare, and consumer staples all outperformed the S&P 500. And 5 sectors underperformed, specifically industrials, financials, consumer discretionary, utilities, and real estate. It was another week when lots of stuff happened. Remember, Lenin said, there are decades when nothing happens, and there are weeks when decade happens. That easily describes the past few weeks. Still, we see stocks going up. So that's encouraging. Yes, there is money to be made. The VIX traded down to 21.74. It closed last week at 25.51. Oh, the VIX. It just isn't behaving as it should be during a market bottom. So be careful out there. The complacency is concerning. The possibility of a sharp sell-off is not only concerning, but probable, especially as events unfold. The 10-year note closed the week at 3.38%, flat week on week, down 50 basis points or 0.5% year to date. It's another signal that the markets are expecting lower, not higher, interest rates, in spite of all what Mr. Powell says. Oil closed the week at $69.20. It's up about 3.7% on the week, now down about 13.38% year to date. In this period of interest rates rising, there's plenty of opportunity, doubly so as we know from money flow data. But a very large number of retail investors are selling absolutely everything. Until last week, they were selling stocks and buying bonds, but now they're selling everything. So just watch for the ops and dollar cost in. That's exactly what I do in times of stress like this. That's exactly what I do all the time. Yesterday was Friday, and I know what you're thinking. So yes, I did buy Bitcoin. Yes, I did buy Ripple. Hey, it was Friday morning. After all, what am I supposed to do on a Friday morning? Talk to my wife? I spend my free time talking to my buddies, money freaks, profit-seeking degenerates. We've got our hands in absolutely everything, and we talk all week in a private Telegram channel. We are Global Wall Street, we're everywhere. And everyone either knows someone or knows someone who does know. So this evening we got 7 slides for 7 days. Let's go. And here we go. Tim Price with some very apropos advice, what we were just talking about. You should just sit there. Most of the time, the greater majority of the time, just sit there. You bought your assets for a well-defined, a specific reason. Things move, markets move, prices change. Don't panic, just sit there. Don't do a darn thing. The last thing you want to do is buy at a certain price, see it drop significantly from that price, sell it to protect your money, and then only have to watch it soar after that. Don't do this, guys. Still, people fall into this trap all the time. They start listening to other people. And you start to hear this all the time that you need to buy more. No, take an approach. Look at your cash flow. Look at the assets you're holding. Look at the prices. Don't listen to other people. Obey your model. Don't fall into this trap, guys. It's really, really difficult to get out of it once you fall into that mindset. And now we see that interest rates are rising. We see lots of trouble in the banking system. And who's behind it? But I had to put this one in. Yes. Mr. Powell is sort of behind all the nonsense that's going on right now, right? Because he's sort of dogmatic, if you excuse the pun. He's insisting that he has to raise interest rates. A lot of people seem to think he should have stopped instead of doing 25 basis points last week. But he did. At least he didn't go 50. Because until 2 weeks ago, the consensus was, at least what we were seeing in traded Fed funds futures, the consensus was 50 basis points. So he's paused. Still, the markets are saying by second half of this year, we're going to see 100 basis points throughout the whole third quarter and fourth quarter, the whole second half. It'll be really interesting to see what happens there. But as I mentioned, he really should have stopped raising interest rates. The first rule of digging holes is when you find yourself in a hole, you stop digging, don't you? And yet he's keeping at it, and we'll have to see how this all ends. It'll be really, really interesting to see how it all plays out. But we're not worried, are we? Because we buy assets that generate cash flow. We buy gold, we buy silver, we buy Bitcoin, we buy perhaps Ripple if you're a little bit more riskier minded like I am. And of course you buy property. And then you don't worry about this stuff. Still, we have to wonder what these guys got planned for us. Mario Draghi, direct quote, Google it. Yeah, much higher public debt levels will become a permanent feature of our economies. I have no doubt about that. And it will be accompanied by private debt cancellation. Guys, private debt cancellation. Be very careful about this. Still, we know where we can put our money and we can escape all this tyranny that's going on in the global financial system. Just buy Bitcoin. And when you buy Bitcoin, as this chart shows, what you need to do is get your Bitcoin off the exchanges. The black line is showing us the price of Bitcoin. What we see with the green and the red is we're looking at the position change on exchanges. And we've never really seen people pulling money off the exchanges to the extent that they are now. What are they doing with it? They're not spending it. Don't fall into that trap of thinking. It would show up someplace on the exchange. Money is going off the exchange. Why? They're buying Bitcoin and they're pushing it onto their private wallets. Hopefully they're cold wallets, Trezors, ledgers, devices like that. Even if they're a hot wallet, it's not on an exchange. Guys, I've mentioned many times, when you buy your crypto, get it off the exchange. A cold wallet is best. You can get them for less than 100 quid. Failing that, get it off into a standalone wallet, preferably on an iOS device. Worst case, you put it in something like MetaMask. Get it off the exchanges. You don't want to be sitting there with a whole bunch of coins on an exchange and find out there's an issue that you've got exposure to. Could be like FTX, where the exchange is declared bankrupt and you're an unsecured creditor. There are other instances, guys, where the coins are just locked up. I do like the exchange I'm doing business with now. If you need a reference, DM me and I'll mention them to you. Very good. They're in the UK. Every Friday I buy Bitcoin. Every Friday, as soon as I buy, I push it off to my hardware wallet. And they show up, within an hour, more often than not, within 15, 20 minutes. But yeah, that's exactly what you want to do, guys, to protect your wealth. And here's another chart showing halving cycles. And this guy's got an interesting theory about the price with every halving cycle. Yeah, plenty of opportunity here, plenty of room for thought. And since I'm holding a bunch of Bitcoin, I certainly won't complain if it pushes to 500,000 after the next halving. We'll have to see. Of course, the next halving is in 2024, May 23rd, I believe. We're still not sure of the exact date. It comes 210,000 cycles, block cycles after the prior halving. So it's roughly every 4 years. All right, guys, that's it for this evening. I hope you have a safe and wonderful week coming up. Buy stocks, buy bonds, buy yourself some crypto, and start to consider rental property. Take care, guys.